Hey, property management friends. Welcome to This Week in Property Management. I'm your host, Jeremy Pound from RentScale. Today, we're having a conversation about some trends and demographics that might be creating a silver tsunami of single-family rental sales and potentially entire liquidations of rental portfolios. If you're reading that right, that could mean that your best clients might be heading for the exits. But there are some opportunities here where we might actually be able to make our businesses better rather than bust. But while we wait for other friends to join us live, let's revisit a quick highlight from a past episode.
In advertising, there's conversation about an eyeball, a click, a conversion, contract signing. You can make money at any segment. You can sell eyeballs, you can sell clicks, you can sell contracts. My disposition is to go as deep into that funnel as possible, ideally to the actual signed contract, for two reasons. Number one, it helps me understand the scope of the needs better. It really gets me involved in the guts. I like absorbing the risk of getting closer to the bare metal. And my belief is that there's greater economic reward in doing so. My career was like going from selling leads to the CRM, to education, to finance, just pressing as deep into the problem as possible.
Hey, be sure that you're subscribed to us on YouTube, LinkedIn, Facebook, or X so that you can watch these industry episodes live, be not only the first to hear about what's new and trending, but actually comment and participate in the discussion. All right, let's jump into some news. I spent last week at the IMN Single Family Rental Forum in Miami Beach. There was a great time, tons of people. I think it was 1,800 attendees. There was tons of focus on build to rent. Traditionally, everybody who used to be going into multifamily all of a sudden understands what we've understood, which is there's an entire class of renters who want four walls, a backyard, and privacy and a roof. They don't want to be going in an elevator to get to their house. And so it's just amazing to me to see how many people that were traditionally focused on multifamily actually buying giant pieces of land and building a build-to-rent single-family resident property neighborhood. It was at least, I don't know, I maybe want to say it was about 50 to 70% of the panels that we went to and that we saw were all about the opportunities and the trends and the strategies of build to rent. What does that mean for us as single family property managers? Well, that means that our owners are now going to have inventory coming on that will actually compete apples to apples with them. Still don't think it's exactly the same thing. We still have a lot of things to consider, like school districts and neighborhoods and actually blending into your neighborhood. But it was really interesting to me to see how much institutional money and how many very smart people were really focused on building single family residences to rent and to sell to investors. So keep your eye on that. One of the big things of the opening session was the announcement of the Roofstock and Mind merger, which we're going to talk more about in just a moment. But the announcement was really focused on the synergy and the ability of the two companies to be positioned to take on the potential coming of portfolios changing hands. So if you don't know, Roofstock is focused on basically being the MLS or the Zillow of rental properties that are available for sale. And Mind was basically the most funded VC-backed play to actually create a national property manager that was completely focused on tech. These two companies have now merged. And so the opening session was them basically explaining why they saw the opportunity to merge. The CEOs of both companies focused on the benefits to their clients of selling or buying rental properties. And they were also confident that we're going to see a large turnover trend that will be coming in the near future. And that got me thinking. And I did some research on this. And this wasn't really a strange idea to me because a lot of us are talking about this. But I really want to understand what were the material facts or the first principles that were underlying this trend. Did you know that the youngest of the baby boomers turned 60 this year in 2024? And CNBC reported that more Americans are expected to turn 65 in 2027 than in any other time in history. And obviously 65 has traditionally meant retirement age in America. Now, that might mean that the largest generation that we've ever seen retire might be getting out of the landlord business. Now, there are a number of ways that this could happen. You could do it through retiring, doing self-management, to hiring a PM like you guys, which is pretty exciting, or by liquidating those properties and converting them into other, what they might think are safer investments. Or inevitably, they may change hands by dying and leaving those portfolios behind to their heirs, who might actually prefer to liquidate those assets for whatever reason and turn them into other investments because they did not sign up to build and manage this type of portfolio. So that's what today's show is all about. I've got Lior Abramovich from Blanket here with me to discuss how property management firms can actually position themselves to proactively handle these coming trends and transactions. I'm excited to introduce you to him, but first, I want to take a quick look at what people are saying on the interwebs and go to this week on social media. All right, so you're getting a double dose of my good friend Jordan Muela. You saw him in the intro video, and he made a fantastic post on social media where he essentially was talking about the Mind acquisition and talking about what that actually means. So what Jordan said is that traditional local PMs have been very outspoken about the trend of large VC-backed companies trying to make a national play purely on technology. And we've had a lot of outspoken property managers talk about why that would not work or what the challenges would be. And perhaps they may have been right. So Jordan shared some bold takeaways about how the life cycle of Mind played out. This is what he said. He said, this is not a merger. After multiple rounds of layoffs, it was clear that Mind was already in trouble and unable to raise further funds without wiping out existing shareholders. It was time to get out. And this was not a positive outcome for Mind's investors and shareholders. This was likely at a valuation that wiped out the very earliest investors. And Roofstock was simply taking advantage of a deal that they couldn't say no to. He goes on to remind his readers that property management is a service business first that can be boosted by tech, but it's not a tech play that makes service an ancillary consideration like some of these larger companies have been doing. So what do you think? I'd love to hear from you on what this means for the industry as we see more consolidation, new entrants to the market, more prop tech, and industry growth overall, which is all I'm seeing. It's an exciting conversation. Okay, on that note, let's bring these two topics together and bring on Lior to discuss how you can take advantage of these trends. But first, a quick word from our sponsor.
Hi there. Did you know that RentScale hosts one of the largest communities of property management sales professionals in North America? Well, my name is Reese Register, and I'm actually a previous BDM and currently a scale coach here at RentScale. We provide over 20 hours monthly of teaching and training and accountability to make sure that our BDMs are supercharging their sales business through inbound, outbound, and allbound. So if you're interested in learning more about supercharging your business, go over to rentscale.com. We'll be glad to schedule a consult and see how we can help you transform your business today.
All right, I'm excited to welcome our guest. Welcome, Lior. Before we jump into questions about who's selling their portfolios and what property managers can do about it, give us a quick intro to who you are.
Sure. So first of all, thank you for having me, Jeremy. I think it's a very interesting time that we're living in right now in the real estate space and specifically in the property management space. There are generational shifts, I would call them, that are going to impact each and every one in our industry. So to everyone here, first of all, thank you for coming. My name is Lior. I'm the co-founder and CEO of Blanket. Blanket is a property retention platform, really aiming to solve the problem of owner churn in our businesses, which we know that is caused a lot of times due to owner experience, but a big portion of that is owner sales, which is really one of the topics we're going to talk about today. We're also a VC-backed company. that is working hand in hand with our clients, with our property managers, to really help them, first of all, eliminate the problem of owner churn, but also help them grow and become profitable and reach all of their dreams and goals in their business.
Amazing. Thanks for joining us. I thought you were the perfect person to talk to after everything I heard at IMN, which is why I told you I reached out. And I think a lot of people are thinking and talking about this, but I don't think it's a big enough focus. So you just heard me share that, I grew up, Lior, I grew up in the US. I know you're from Israel. But we've always talked about the baby boomers. The economy is driven by the baby boomers. It was the biggest demographic, and it was driving everything. And everybody talked about what happens when the baby boomers retire. Well, they didn't know that we had the millennials, which is going to be even bigger, coming behind it, which is actually an amazing silver lining. But it is something to think about, because if I did some research, and this shouldn't be surprising to anybody, but more people 40 and above, and it actually gets dramatically more involved when you get to 50 and above, own rental properties in the US than any other age. So the youngest of the baby boomers are turning 60 this year, and that we're going to see more and more of these people retire. So what are your thoughts about how active the selling market's going to be with rental properties? And will entire portfolios be changing hands, or am I making too big of a deal about this?
I think it is a big deal. This was actually something that I was talking and researching many years ago. So before Blanket, I was part of a large build-to-rent operator in the States. We were working across the United States, but mainly, in the Sun Belt and the strong rental markets there. We've done, I would say, almost 1,000 homes before build-to-rent was a thing. Before build-to-rent had the name, it was, mainly just new construction back then, whether it's through a GPLP structure, through a fund investment vehicle, or through direct ownership, selling for sale inventory to owners. But even back then, the whole 55 plus communities was already a thing that was coming up. So it was a big trend that we were researching internally. And as the head of acquisitions of that company, this was a big concern. So it was maybe a little bit earlier than today, but it's still something that is talked about for many years in the industry. It's going to impact everything, including commerce as a whole, not only real estate and not only property management, but commerce. And if we're trying to understand how the sales market or the rental market will react, we really need to get into those different scenarios that you mentioned, some of them, of what are the choices that these baby boomers would make. And I would like to add one option that is not talked about a lot right now, because it is a trend in the formation part of it, that beyond the potential use cases of God forbid, dying and leaving the properties to our loved ones, or just deciding to manage these properties myself. I have some spare time right now. I'm retired. Let's just try the DIY play, God forbid. And there's another option that is taking a huge uptick right now, which is shelter or age at home. A lot of seniors are deciding not to go to a care home, to a senior home, and just decide to turn their property into an accessible property, to turn their home into an accessible home with all the things that they need to age at home. So this is also something that is taking place that might impact or offset some of the additional properties that we will see hit the property management market as properties that will need professional management. So these are like two trends in play that we will see. Mm-hmm. And when we really try to take the next step out of it, of those different scenarios, and think how really it will impact, we'll definitely see different moves. Move number one will be a lot of accidental landlords, coupled with the high interest rates that we have right now. So the decision to maybe leave a property for myself, or even if I do decide to go and as a senior, to go to a care home, to a senior home, and I'll have to do something with that property, because now I have another incentive not to sell it, or not to just dispose of it, because there's a good interest rate right now. I should better keep it. And this is the decision making that a lot of accidental landlords are doing right now. So what I expect to happen is that the number of these accidental landlords will increase as the baby boomers come into this decision-making intersection also. And based on that fact, that means that there will be more demand for property management services. I think specifically from the baby boomers, even though some of them would say, yes, I have some spare time right now to, manage the property myself, a lot of them would want to finally devote the time for their family after maybe 60 years of work. And managing a property is a lot of work. So my take, I would say that the majority would turn to professional property management rather than do it themselves. So this is another thing that will push the demand even further.
Mm-hmm.
Now, we need to also look at the professional operators, the different friends that we saw at IMN, the different single family rental funds, the different Wall Street players that are now committing billions of dollars in capital into the rental space, specifically in build to rent, but also pushing a lot of money there. While on the other hand, we have folks that want to dispose of existing portfolios, because many of the strong funds started several years ago when a lot of the properties and the main play was not built to rent. Was it buying existing properties below market value? And some of these properties, before the buy boxes of a lot of the professional investors really became accurate, a lot of them were buying very old homes that now already have high capital expenditures. So they are already looking to dispose of a lot of those properties that will eventually hit the market, but a lot of them would still be sold off market because many of these properties will have a tenant in place. That's number one. And a lot of times, many of these properties wouldn't necessarily fit the so-called profile of a property to live in. They will be great, maybe investment properties for other investors. So this is why we'll see probably a lot of properties switching hands off market between other operators or between operators to mom and pop investors, our clients, the property management company's clients. So this will definitely create a very interesting trend because now supply is very low. Now supply is hitting rock bottom because there is also a big trend right now that's happening of mismatched expectations between sellers and buyers. Sellers who now still want to sell on the market think that they can get high prices as they got about 2 years ago. But buyers are not there. Buyers don't have that ability to pay those prices. So there is a huge uptick that was shared by Mike Del Pret, which is one of the most interesting people in the PropTech space. He's a professor at a university that's teaching a PropTech class. He tracks a lot of interesting metrics. And he showed yesterday that the number of delistings compared to all the listings on the market had a huge uptick, which showed that a lot of people that try to sell their homes right now on the market delisted them because there wasn't a mismatch between what they hope to get and what they can. So those are some of the trends that we're seeing right now, but there will be a lot of properties switching hands for sure between investors in the next several years. This is something that will impact directly our property management space.
Well, that was great. You shared a lot of trends. You actually made like 6 cases why like properties would be changing hands, which I really appreciate. The agent home, stop talking about that. Don't give away my business model. I think there's a huge opportunity to buy homes where people want to actually agent home, and I think they'll be renting that because the home that they bought, it's 2 stories, they can't live in that, and they want to trade. They will actually rent a home where they can age in place. So total sidebar, maybe not what you were saying, but that was a big part of the conference. We talked a lot about that. This is a total sidebar what our conversation is about today, Lior, but you brought it up. And if the numbers I gave you, which is more people are going to be retiring and they're getting older than ever, there's clearly not enough places for these people to go. And the traditional idea of going into, a giant retirement home is fantastic for some people. Some people think they can live with their family and their family is not able to take them on. And there are other people that say, hey, look, I'm really independent. I've lived my whole life being independent. That's really strong with the younger baby boomers. That's another trend that I've seen. And they're going to say, no, forget all that stuff. I'm going to stay in a place where I can take care of myself and I can just get somebody to come and take care of me. So totally tangential, I think, to what the theme of the conversation is, but it's an amazing trend as well. Maybe we need to do another episode about that. So I'm glad you brought it up. But all the things you're saying is that's a great point. This was not a part of my research and my thesis, but there is, I do know that there were these amazing acquisitions and these funds created by institutional people coming out of 2012, 13, 14, where they bought these homes and they rolled them up and they created these major investments. And now we wake up and we're in 2024. And, I live in a house that was built in the 1980s that I love. Just yesterday, my water heater broke and, had to go out and get it fixed right away. It's a reminder that the CapEx costs of a rental property that's been around for 20, 30 years gets more and more expensive. And so I'm putting my own spin on what you were telling me, but these guys are looking at it and saying, we're better off trading these things in and buying all of this fantastic new single family inventory that's coming on the market. I don't know if you saw this, but in the last couple of months, something like 25-30% of the transactions in the residential real estate market were new construction, and that's the most it's ever been in history. Basically, well, going back to like the 40s, I think, where basically they were, that's when like the suburb was invented. So in modern history, there was more like a bigger percentage of new transactions were actual new construction, which is crazy. And that's because nobody's selling their home, so everybody's moving into the new inventory. So I guess what I'm taking away from that is, as these guys are looking at it and saying, we can go do a build to rent project, we can buy this new stuff and we need to liquidate this and move on. Am I understanding that right? Because I think that was a really good point you were making.
Correct. 100%. And there's a big trend that is impacting that as well is how home builders are faring in this market today, because also not a lot of buyers have the ability to buy because of the cost of financing. So a lot of home builders have a lot of inventory on their balance sheet that they bought several years ago when they started buying a lot of land reserves to prepare for the next years. So now what's happening is that when you have everything on your balance sheet, you need to start, bringing in the revenue, even though you cannot sell at the same rate that you were selling before, had the for sale inventory. So now a lot of home builders themselves are turning into the build to rent sector, whether as the operator or just the home builder that is building them. But some of them are getting into being the operator themselves and bringing that rental element as well. And I think this is where there's another very interesting opportunity for property managers, because this is a trend on the rise. And if property managers can position themselves as a true valid partner that can take on a huge build to rent community, this is a game changer by itself.
Yeah, and I think even more, I mean, so let's talk about these portfolios. So I have, thought a lot about this. I remember watching, during the peak years of COVID, 20 to 22, where everybody was just making obscene offers on any single family home, which we all know has been a big part of the run up. But they knew that with the cheap money, and they knew with the long-term, returns, this was better than any stocks that they could be buying or any companies they could be investing in. But one thing that I heard a lot was these homes that were bought by these big funds. And so we might be talking about different things, right? There's the small professional investors, and then there's like the true institutions like a BlackRock, somebody who's just collecting tens of thousands of homes. So one of the things that I heard a lot from prognostication and experts was these homes will never make it back on the market, because if you own 10,000 homes or 5,000 homes, there's no way that you can ever sell them one at a time. Like, it doesn't make any sense. Like it would like the costs, the admin of selling that would be insane. So what they would do is they would just put it in a portfolio and sell it to another investor who is like, okay, your buy box was A-class properties that were X price. And then as time goes on, they turn into B-class properties. And there's another investor that says, well, that's my buy box. I'll take those off your hand and you'll go invest it again. So again, I think we're straying from, kind of the original, 15, 20, 30 home properties. But is there a parallel there? Do you agree with that? I mean, what's the overhead, I guess I should say, of if you own, a serious portfolio, where it's not even worth it to you to get market value one at a time, because the cost and the effort to go out there and get market value for one home at a time is actually going to cost you more than just like bundling them up and being like, take these off my hands. Is that
Exactly.
tell me what you think about that.
100%. That's what's happening today, because when a big player like an institutional fund decides to sell a property, that means they need to dispose of it. And as long as it still stays on their balance sheet, they're losing, or they're just losing on a better opportunity. So the faster they can sell that property, even if it's at a lower price, might make more sense in the long run, especially when we're talking about such a large scale of properties. So this is something that's happening today, and this is one of the reasons that a lot of the institutional players don't have a system for the on-market play. We have systems for the off-market play, which is technically the human connection, the partnerships, the working together with one-on-one, going to IMN conferences and meeting other partners in the industry that might have an interest in the type of properties that I have in the specific buy box, because different players have different strategies. So, one person's, as they say, one person's garbage can be another person's gold or treasure. So it really is something that depends on the risk profile of every institutional fund. So because they don't have a system for the on-market play, and because it also impacts their balance sheet, the more it stays on their balance sheet, which is the case normally with a non-market play, because it really depends on the area, it really depends on the market. On-market will take time. A transaction that is off-market with a big portion of a portfolio, we're talking about something sometimes like tens of thousands several years ago, or today thousands of properties, that's done in one transaction and it's gone off your books. So this is something that is happening all the time. This is the predominant way which the large institutional players are disposing of their properties. It's very rare to see a big player disposing of their properties through the MLS. It's very rare. This is why platforms like Roofstock have seen a crazy surge over the last several years, because the buying spree that we were on wasn't just on the retail market. The institutional players were also on a crazy buying spree in the last several years before the interest rates went up. And this is where players like Roofstock were positioned to work very well, to have a main source of properties that are sort of coming to them from retail clients, in many cases, that want to sell their property quickly. And some folks who are considered experienced investors that have maybe several dozens of properties, bundle it up together and position it in a simple one deal to the institutional investors. So the same opportunity that they had on a large scale, technically on a smaller scale, you have an opportunity right now for property managers as well that are doing sales to help folks that do have an interest in buying, because there are people still buying. It's not like the market froze completely. There are opportunities. And now it's an issue of how you position yourself to the current opportunity or the current challenge.
So, I get some of the questions that I was going to go a different way, but when you say that, obviously, through your platform, because I think you might be hinting at that. So if I'm a property manager with, 300-400 doors, maybe 800 doors, do you think that there's an opportunity for me to introduce my property owners that are buyers that maybe, they have 15, 20 doors. They're just looking for some great deals. They might take on another 5, 10 properties through Blanket or through, the program that you guys are setting up. Is there a way to give my clients access to this institutional sell-off, or is this just driving the market? I want to make sure I'm clear on where you're going with that.
Yes. So it's a yes and no. It's probably a no on the large portfolios, because again, when somebody sells a portfolio of 1,000 properties or 300 properties, there's a very limited amount of potential buyers for that. Very limited. When we're talking about a portfolio of few properties, several properties, that is still limited, but it's about, I would say, between 6 to 12% of the market. So the number of properties owned by owners is distributed in the following way in the market. So owners who own one property consist of around between 50 to 60% of the market. Those that have 2 to 5 properties are an additional almost 30%. And then we have anything between 5 to 50, which is about 6%. Between 50 and a couple of hundreds, it's the other 6%. And then we're left with like 1 or 2%, depending on which source you're reading, but 1 or 2% for the institutional players.
Got it.
So this is sort of like your buying pool based on the number of properties you're selling. And when we're thinking about ourselves in our industry, in the property management industry, where either way, most of our clients are how some people call them ones and twosies, the ones who have 1 property, 2 properties. Maybe some folks will have more than 5 or 10, but it's a very small number. So now it's really is a question, what is the product that I'm offering to them? If it's multiple property portfolio, so I will have a specific group of people that I can really turn to and provide them my VIP services. If it's the smaller one, so it's a matter of 1 property at a time. But now we're getting into the question of, where is that product? Where can I find that product that could make sense in the current interest rate environment? And this is where things get tricky. And putting Blanket for a second aside, today when you go on the market, like visit MLS, go on if you or Zillow to the extent if you're not a licensed agent, when you pencil in the numbers, it's really difficult today to find positive cash flowing properties when you are planning to take on financing. It's hard, especially in the attractive markets that you normally would go after. Today, the more periphery markets have some more valid opportunities that might make financial sense. But when you're going to look at property in a market, for example, like Tampa, Florida, I love that market. I have properties there. Numbers are difficult. So the only way for you, probably not necessarily the only way, but I would say the easier way for you to make sense is to find off-market properties. You wouldn't find those properties on the MLS. You wouldn't find those properties on Zillow, because those sellers that are selling those properties have a specific reason why they're selling their property there and not off-market. They want top dollar. They want multiple bids. They want people fighting to maximize their price. So for you as an investor, probably the only source would be off-market. And now it's a question of really, if we took down the option of buying, from the large institutional players that want to dispose of multiple properties in one deal and not try to sell it one by one, even though some are trying to do that as well right now through other companies that are providing these services. But if we're talking about one-to-one, we need to provide access to off-market inventory to our clients today. If we want our clients to keep growing, we have to offer them off-market inventory. We're talking about wholesale. We're talking about some turnkey operators that still have some great opportunities that can make financial sense. And that is how we can really at least remove, to some extent, the friction of the negative cash flow situation and help our clients buy more properties. But on market, it's very difficult today. And off market, this is where the opportunities lie. And unfortunately, finding good off-market inventory at scale, especially, it's hard. Even for us as a tech company, it's hard.
Agreed. And I'd say that just for the listeners, probably Lior, right now, you and I geeked out on this. There's probably our audience is listening to this and being like, why are you talking about $10,000 portfolios, institutional money? That makes no sense to me. But I think that the parallel is that we're saying that happens already. That's happened for decades at the high end scale. And now what we're seeing is that same gameplay, that same game plan is now happening at smaller. So we have more landlords than ever. We have more people that are owning, single family homes that are ever, as Lior said, onesies, twosies, but I also say 60s and 80s and 16s and 20s and 32s and 34s. So that same game plan that has been in the market forever, because I get it. If we're running a single family home property management company, if we're in transactional real estate, we just assume everything goes to the MLS. It's an assumption. It's a blind spot. We forget about these off deals markets unless we're in wholesale. And then even then, we think it's all this thing where we've got to come in and the property is completely distressed and we have to force value add. And this is basically a new play from what I'm understanding. And so going back to, our clients, Lior, who probably have, 200, 500, 1,000 doors under management, and their owners maybe own, 2, 4, 8 doors. They've got younger investors coming in. They're like, hey, I want to build a portfolio. There's an opportunity here, right? So copy and paste that big opportunity and put it in our space. And I think that's really, what the conversation's about. But I also want to say, when I feel like I've got strong opinions on this, but when I think that a lot of people, if we tell this to them, they say, why would anybody ever sell their property off market? I've got 4 properties. Why wouldn't I just want to optimize them on the MLS? But I know that there's some advantages of selling a property from investor to investor and not having to deal with all of the headache of going on the MLS and going into a retail sale. Would you remind our viewers kind of what that is? Like, why would I want to do this? If I've got 6 properties and I went out of the business, why would I want to sell this to other investors through my property management friends?
So we have to look at it 2 ways. Number one is the status of the property. Let's say you're an owner and you need the money, okay? And refinancing, cashing out on the property at the current rates might not make sense. So then you have 2 options. If you have a tenant in place, you'll probably wouldn't want to put it on the market. Either way, you'll have to wait until the lease expires and the property is vacant, prepare the property, start doing showings, and potentially maximize your dollars. But if you have a tenant in place and you need the money, technically your only way is selling off market. And now we have to remember something. Off market, a lot of times at the exact moment where you say off market, you imagine a much lower price, because we imagine that wholesaler. When we say off market, we imagine that wholesaler that low balls you with an offer 50% below market value, and like that's what you got. The off market is bigger than that. Off market is me and you. We can decide on a price that is attractive to both of us, and it shouldn't be 50% below market value. Maybe it will be 5%. Maybe it will be 10%. And in a lot of cases, when we see it ourselves, it's not below market value. It's actually somewhere around that ballpark. So off market doesn't necessarily have to be synonymous with, that low offer that comes from an aggressive wholesaler, that tries to buy 50% below market value. Yeah. So that's number one. We need to understand that, the off market is bigger than that. So really the ability for you to, or the need for you to sell it, or why should I sell it off market is, first of all, if you want to sell it on your time, that's number one. If you want to sell it on your time when you need the money and you don't have to wait until the property is vacant, that's number one. Second thing, you also don't want to risk. Let's say you do decide to put it on the MLS. You don't want to risk the current tenant, because the tenant might decide, and probably a lot of us experience that, like, not giving anybody to go into the property for a showing, or God forbid, stops paying rent, or this creates when you say you're going to sell the property, this starts a different type of conversation and sparks other scenarios that we might not want as an owner of that property. So that's number two. And number three, the sale itself will be easier in many cases. Many off-market buyers are accustomed to buying properties sight unseen. They will send they will have an inspection contingency. They will send out an inspector, but they might never see the property. As long as the numbers make sense and the inspection is okay and the price we agreed upon is okay, maybe with even no appraisal contingency as well, done deal. That could be a fast closing, talking about middle of a couple of weeks. But if I'm going to the MLS, especially in trying to sell it to a potential home buyer, that home buyer, in majority of cases, would need financing. Financing already gives a lot of time to the closing. So we're talking about, instead of a fast closing of a couple of weeks, we can talk about 2 to 3 months if everything, goes well, because the deal might fall through because somebody eventually didn't get approved for financing. So that selling it on market adds another level of risk to it and time to it. So this is, and then the owner is left with the question of what's more valuable to me. And this is something personal. And us as, agents or property managers that are representing our owner, we really need to act in the best interest of our owner. And that's when I say that technically there is a sweet spot. There is a sweet solution. You don't have to choose one of them. You can start by testing the waters, trying to sell it off market while there is a tenant in place. See if you get any offers that make sense. And if you don't, eventually when it's already vacant either way, try to sell it on the MLS. So you don't have to choose one or the other. Yeah, you can just do both. Just manage the process in a way that makes sense, and also position yourself as the one who represents that deal, as the property manager, hopefully for your client, as that trusted advisor that really gives them the best of both worlds.
I love that you added that. I didn't even thought about, I mean, anybody in real estate knows about the footprint of days on market, and all of the MLS is going to show listed, price dropped, relisted. And so you're kind of avoiding that. I didn't even think about that. You know, you're stealth when it comes to that.
Yeah, exactly.
Yeah. All right. So, well, I've definitely heard my clients say things like, look, I mean, you're looking at the guy that sold in the same neighborhood, and the house was remodeled. It was brand new carpet. Everything was perfect. You've had a tenant in that property for 4 years. If you want that price, you're going to have to get that tenant out. You're going to have to go in and redo that work. And whatever spread between what an investor would pay for that property and what you would get might actually be right there with lost rent, with carrying costs, with the remodel, with everything. So it's so important to remember that a retail buyer expects a retail product. An investor wants to invest in an investment grade product. And they are two different things. Right? Two different needs. So I love that. Plus everything you just said. Even think about the financing and the risk there. All right. So if you're sold on this, I'm going to ask the questions I think my clients would be asking. So they're like, okay, this just seems like a giant distraction. Like, what's the advantage to me? I mean, I'm running a property management company. The last thing I want to do is talk about selling a property to my stable owners that I love. And now I got to have a conversation with them, or, do I even want to have the conversation with my owners about buying more properties? Because then they're going to have questions. They might want to see the property. I mean, this just seems like a big distraction. What's the business value for me as a property manager in investing in something like this?
I think it has two elements to it. Number one, I would say that in today's world, where us as property managers are, I would say, out of the what I call the race to the bottom of management fees, which was sort of like in the past decade was like the main differentiator.
Yeah,
I'll charge you less. I'll charge you less. Like that was, the main pitch. Now we've switched that into what I call a race to the top, or a race to the value. How can I bring you more value that you're not only will, think about bringing me as your property manager, but I will also win you as a client for life. And I think this is where the biggest opportunity is for property managers, because tenants have their needs and owners have their needs. The needs of owners are normally around the whole purpose of them getting into rental and property investing. I want to get passive income. I want to build a financial future. I want to retire financially safe. I want to build a portfolio. I'm putting aside for a second the accidental landlords that might have different interests and needs that, by the way, can be sort of like switched into an intentional investors with the right approach. But putting that aside for a second and focusing on the investors, the folks who did get into this for the purpose of selling. So now, if you're their property manager, you are the only person who has the best knowledge on the local market that is valuable, so valuable to me as an owner, as an investor. And I can't get that information anywhere. So number one, if you would start investing your time in helping your clients buy and sell, you'll start showing them your value as a trusted real estate professional and not just a service provider. So you might look at a conversation with a potential buyer as a waste of time. I would flip the script and change it to an opportunity to show your value as a real estate professional. Get on that call. You might end that call with not doing anything afterwards because the market is tough or whatever. But just saying that the market is tough, just sharing the trends, sharing the current market sort of like trends as well, and what are the best areas to buy a property in? Where are the lowest days on market to lease a property in? And where are the best tenants or the safest, I would say, properties at? that signed the longest leases. Just sharing that information, I already think much highly of you. So number one, just having those conversations by itself is a win versus a time waster when thinking about, so like, why should I invest time in helping my clients buy more? But if you do get them to say, okay, let's move on to the next step and buy a property, that's a double win. So if you do sales and you have a brokerage operation in place, so you first of all win the commission. And depending on your market, that could be a big check. If you're operating in a very expensive market, that could be a serious additional revenue stream for you. That's number one. Number two, that's another door. So you bake onto the commission the lifetime value of a unit, of a door, based on your market. You're winning twice, sometimes maybe double the value that you can get from another door. But the interesting thing about it is that once you show them that you can do it for them, so after you've won the ability to show that you are a trusted real estate professional, after you won another door and a commission, now that owner will remember that you are the one he's turning to whenever he wants to buy or sell, versus an agent that he used to work with that is currently sitting in his mind. So the thing you're winning by doing that is you're staying top of mind. Is you're putting that thought that is currently sitting elsewhere and verifying that next time he will have another need to buy or sell, he will think of you and not of someone else. So I think that's definitely a win versus a time waster. But then you might say, but hey, I don't have time. You know, it's just me, another property manager, and one of our remote team members. I don't have time. So then really, this is where technology can come into play. And I'm specifically not even talking about Blanket at this moment. I'm really trying to help people understand that there is a way for you to do that without technology. But technology is one of the options that we are positioned to operate exactly in that space. But if you don't want to work with Blanket, so technically you can look at your trusted agent referral partners. You have agents probably that are already sending you referrals, right? So if you do and you have someone you trust, amazing. If you don't, or you have someone but you don't trust, that's a different situation. But let's say you do have someone, meet with them. Think of a setup, think of a system where you can have them be sort of like the designated agent to any need that your clients have, even with questions, just regular about the market. You know, there are a lot of folks that are ready to buy, but they're sitting on the fence. They need some inputs. They need some information. They need some knowledge to make them feel, I'm ready. You know what? I'm ready now. That's it. So having those conversations with that agent, for that agent, it's potential leads, additional transactions. And specifically in today's market, agents are also struggling as well. For them, more transactions means more revenue in a very difficult market. So you can partner up with one of your partner agents and form sort of like a program where they can benefit from that, and you can focus on your business. You can focus on scaling your property management business by still showing that you're a trusted real estate professional and having the agent do the actual work itself. And that way you don't hurt your bottom line. So I think it's an endless, sea of options and possibilities and opportunities. And it's really just for you to understand what's the right structure for you. Do you want the commission, or do you just want to take care of your clients?
Well, we've been talking about this forever, Lior, and I love that. And that's why I was so excited when I heard this pitch from you, because even before I knew that a platform like this existed, we, again, working with like 500 property management clients, it's impossible to ignore the people that show up and say, hey, I'm your vendor, tell me what to do, I'll do it, versus the property management companies that are like, yeah, we're going to manage that property. I'm probably going to make you more money than you're going to do it yourself. And oh, by the way, what are your goals? Do you want to buy more properties? Do you want to sell this property? Because I also have that solution for you. So I've been in the service business for a long time in various formats. And something that a lot of people would talk about, I'm going back 15 years, but everybody would say, you don't want to be a vendor, you want to be a partner with your client, right? And that was like the big thing like 15 years ago. Don't be a vendor, be a partner. And then there was this great consultant that really made a lot of headway, made a huge impact on me. And that's what I think that we should be aspiring to as property managers is there's a vendor, there's a partner, but there's actually a level above that, and that's advisor. Like, you don't look at your attorney when you're getting sued as a partner. He's got no skin in the game. He's just advising you because he has what you need. And so many of us fall into this trap of like, hey, we got to be a partner and we got to do what they want to do, which I get it. There's a lot of value to partnering with your clients, but I actually think the ultimate status is to be an advisor. And as you said, they're like, this isn't a property manager who's just running around and doing what I'm doing. Like they're telling me, they're giving me ideas about how I can make more money from the property. They're having conversations with me about cash out refis and going out and buying more properties. They're bringing me off market deals. And even if I say no, I say this all the time, Lior, to our business development managers we train. Imagine for a whole year, you brought 5 deals to an owner and he said no to all 5 deals, or she said no to all 5 deals. What does that result in? It doesn't result in her being like, he's not any good. That results in him or her saying, I don't want to lose this property manager because they keep bringing me deals. And eventually one of these deals are going to be amazing, right? So everyone thinks that it's like judged on this, like I brought you a deal and it was a yes or a no. No, they remember that you brought them a deal, right? And they're paying for that optionality. So I'm just going to give my own sales pitch for what I see that you're doing for our clients when you're investing in a blanket. And by the way, if you go to strategicpm.com, you're going to find an amazing interview that I did with Lior that's in an article, and there's a ton of information there about the blanket product. I appreciate you coming on, Lior, and not talking about your product, but talking about the opportunity, which is what I ask you to do. But I want you to know that there is an amazing article. It's a fantastic technology. Our clients are using it. There's a ton of stuff you should be seeing there. But my sales pitch is for what I'm seeing for a property manager who's using a blanket and having these conversations. It is a positioning tool, like I just said, right? You're not the vendor. You're now an advisor, right? You're an asset. It's positioning you as a better property management. It's a retention tool. Hopefully those people that do sell to another owner. And if they don't, it's a retention tool because they're like, well, maybe I'm paying 1 or 2% more, but I don't want to lose access to these deals that I keep getting from Bob, my representative. And it's also a growth tool. So as Lior just said, obviously my business is helping property managers grow. We all know how expensive it is to find a new deal. Everybody likes to talk about cost of acquisition and how much leads cost and pay-per-clicks exploded. It's so hard to find a new investor. So one of my previous businesses, one of our themes was, how do we turn one client into 3 clients? Because that's through word of mouth, that's through delivering an exceptional service that can't be replicated. It's asking for referrals. Well, I'll tell you what's cool about property management is it's not just clients, it's actual units and doors. And how do you turn every door that you manage into 3 doors? And I think that off-market listings are the way to do it. So Lior, that's my sales pitch. Take it for what it's worth from my storytelling marketing.
That was perfect.
I'm excited about this. And your technology is a great way to do that. So I do want to wrap up because I've kept you really long and you've been amazing. We talked about everything from institutional, days and what we're seeing happening to age demographics to market. This was a fantastic conversation. How can people learn more about this? And do you have any parting words?
Sure. So number one, again, if you want to learn more about Blanket, feel free to visit our website. We are blankethomes.com. There's a simple button right there, book a demo. You can speak to Ben, our partnerships manager. You'd love every second with him by itself, even if you decide not to continue forward. But if you do want to talk about anything else regarding the market trends, etc., as you can see, I normally have a hard way to stop. It's difficult for me to stop talking about these topics. So if you're interested about advice or just sharing thoughts, feel free to just reach out to me by LinkedIn, or if you have my email. This is really something that I love. I love teaching. In my previous role, I've been doing seminars for over 400 people every 2 weeks. So this is something that I'm really passionate about. So you can reach out directly and catch me at any time that you want, and I'll be very, very happy to help. So it's a very interesting time.
It is. And I second that. Follow Lior on LinkedIn. That's how we got acquainted for the first time. He does not waste a post. They're all very fantastic. Thank you so much for being here. Appreciate it. We're going to have you back for sure. And by the way, just a little teaser, we may be working on something exciting about turning one customer into three, like I mentioned, and RentScale maybe having some webinars and some conversations about that with Blanket, which I would encourage you to keep an eye out for. So we're going to come back, go through the calendar and wrap up. But first, let's just hear from one more sponsor. This episode is brought to you by Strategic PM, the magazine for property management entrepreneurs and executives. If you go online to strategicpm.com today, you're going to find an entire website full of content written about your industry and by your peers. And it's completely free to sign up. Just go ahead and click on the create a free account right in the upper right-hand corner. When you click on that, not only can you create a digital account, but you can actually add your mailing address and we will send you a free 1-year subscription of the print magazine, which will be showing up in your offices every single quarter. So if you take a look inside the magazine, what you're going to see is that we are focused on growth. We've got 5 pillars of Strategic PM: vision, strategy, culture, marketing, and experience. You're going to be seeing some great high-class content from some of the best thought leaders in the industry talking about the matters that matter the most to your business. So sign up for free today at strategicpm.com and look for the magazine in your office. Hey guys, I hope you enjoyed that. I want to let you know that if you've got an event that you're hosting, typically on these conversations, I go through some of the bigger events, like the NARPM events and the conferences, but I'm happy to shout out to any events that you guys have coming up. I know earlier today, Deb Newell did an amazing event. Wish I would have promoted that for her on the show. So if you've got something, reach out to us. Go to the strategicpm.com website or strategicpm on any of the social profiles on Facebook, on YouTube, on LinkedIn, and just message us and let us know about your event, and we'll feature it in the calendar. Let's jump into the calendar. All right, I got 2 exciting conferences coming up. The first one is not until closer to the end of summer, so we got a little bit of break here so far. August 27th to 29th, NARPM Southern States is having their annual conference in conjunction with Florida State. By the way, these are 2 of the biggest regional conferences I've been to, and they're actually combining. They're doing it in Sandestin, Florida this year. I will be speaking at the conference with Jen from RentScale as well, and I think we're going to be sharing a really exciting talk with you guys. And even if you're not coming to see us, I hope you'll go. It's still in Florida, and it should be a fantastic time. It's right in the Panhandle. Hope to see you there. Later in the early fall, September 16th to 18th, Texas is having their conference. They call it Texas Style NARPM Conference. It's in Austin this year. I believe it's been in San Antonio for the last few years. So I'm excited about that. You will probably see me there as well. And we'd love to see you guys. Come up and say hi. We always have magazines with us of Strategic PM. And sometimes we're doing, recordings and tapings for the show. So anytime you're coming to an NARPM conference, look out for RentScale and Strategic PM, because we'll be there. Well, that's it for this week. I had a lot of fun today. I hope you did as well. Check out all the latest going on in property management and get the details in the show notes about today's show and guest. Just head over to strategicpm.com, strategicpm.com. You can sign up for the magazine there. You can watch all the issues. You can find us on all the socials. And please like, subscribe, and share. And most importantly, please join us again in 2 weeks when we do it. And that's what's happening this week in PM.